Hello, good morning, everybody, and welcome back to our question discussions on mock paper. Today we will continue with question number 20 on the mock paper 1, and I will plan to discuss few questions according to the provided timing. So today we will continue with question number 20. That is the next question we have to discuss. Prisha has not kept accurate accounting records during the financial year. She had opening inventory 6,700, purchased goods costing 84,000 during the year. At the year end, she had 5,400 left in inventory. All sales are made at a markup on cost 20%. What is Prisha's gross profit for the year? Now this question relates to incomplete records. The chapter relates to incomplete records. This question relates. So it's just what we need to do here. So let me open a new note. So we know we have income statement. In that we have sales minus cost of sales. The cost of sales has opening stock plus purchases. Then we subtract the closing stock, which we will arrive the cost of sales, and if we subtract from the sales, we will then have the gross profit. This is the normal structure in calculating gross profit for any retail, any business for that matter. So let's work out. We'll go back to question again. Prisha has not kept accurate accounting record during the financial year. She had opening inventory 6,700. How much is the opening inventory? 6,700. And then purchased goods costing 84,000. The purchases 84,000. So let's take the total of this. So that will give you, if I use the calculator, 6,700 plus 84,000, 90,700. And then closing stock 5,400. So which you have to subtract. You subtract the closing stock 5,400, then you get 85,300. Then what they say here, all sales are made at a markup on cost of 20%. Here the importance is that students need to appreciate or understand the difference between markup and margin. Markup is actually when you have selling price, cost, profit. When the cost is 100 and when the profit is 20. So that means if your profit is based on the cost, then that is markup. So the selling price will be 120. Whereas the cost, whereas the selling price is what you call 100 and the cost is 80, and now the profit is 20. So now the profit is based on the selling price, that is margin. So this difference you should appreciate and understand when come to the difference between markup and margin. Let's go back now. Here they said this is based on this one is markup. That means this is 100%. And if that is 100%, what you do is that 85,300 divided by 100 into the markup is how much? 20%. So the into 20 you will get 17,060 is what your gross profit is. So if you add this to 85,300, you get the sales 100 2,360. So this is the answer to this question. Let me go to the question. So the question number 20 answer is that. Question number 21. At 31st December 2014, a company's capital structure was as follows. Ordinary share capital 500,000, shares of 25 cents each, share premium 100,000. In the year ended 31st December 2015, the company made a right issue of 1 share for every 2 held at $1 per share, and this was taken up in full. Later in the year, the company made a bonus issue of 1 share for every 5 held using the share premium account for the purpose. What was the company's capital structure on 31st December 2015? First of all, what we do is that we now question number 21. Yeah. Here we draw a timeline. This is 31st December 2014 and this is 31st December 2015. Now on 31st December 2014, my share capital 125,000 $125,000, and they said that the par value is 1 share 25 cents. So, and this also telling you number of shares. How the number of shares actually 125,000. Now since 1 share is 25 cents, what you have to do is you have to divide 125,000 by 25 cents. So if you do that, the number of shares will be 500,000. The calculation is easy. 125,000 divided by 0.25 will give you 500,000. But nevertheless, the question has given you that also. If you see the question within bracket, they have given you that. So it's not that necessarily a problem. Then we have share premium. Share premium how much? 100,000. Now they are making a right issue when? Right issue takes place, that's the first thing happens. The right issue takes place during the 2015 as a first thing. So let's say for example somewhere here, we don't know. And right issue arrangement is 1 share for every 2 held. So 1:2. So we know that number of shares 500,000. From this 500,000, right issue arrangement is 1:2. So therefore, number of rights issue will be 500,000 into 1/2, which will give you 250,000 shares. And then what is the price? The price is that $1. The right price now, as we already know, the par value is 0.25. So we are selling a share at $1, par value is 0.25. That means we are making a share premium of 1 minus 0.25, which is 0.75. And then we can find out how much cash we are receiving. Share capital will be 0.25 into 250,000. That is 62,500. And share premium will be 0.75 into 250,000, which will be 187,500. If you take the total, it should be 250,000. Yes. this and this total will be 250, and that is the cash. So the double entry will be you debit cash 250,000 and you credit share capital 62,500, and then you credit share premium 187,500. So after the right issue, the revised capital structure will be the share capital. Already I have how much? 125,000 plus 62,500, that is 187,500. Share premium, already I have 100,000 plus 187,500, that will be 287,500. If you take the total, 475,000 minus 250, 225. Yeah, that's okay. Now what happens? Now they are issuing a bonus issue. So let's say somewhere here. This is rights, bonus. Bonus, what they do? They say 1 for every 5. So bonus issue 1 for 5. We should first work out the number of shares. The number of shares will be, so we received 62,000, we received 250,000 shares. So already I have 500,000 shares. So the total number of shares prior to bonus issue is 500,000 plus 250,000. These are quantity, number of shares, which is 750,000. Now arrangement is 1 for 5. So therefore 750,000 into 1 over 5, which how much you get? 750 into 1 divided by 5, 150,000 number of shares. So the par value will be 150 into 0.25, the dollar value of the shares into 0.25, so 37,500. Now after bonus issue, share capital will be 187,500 plus 37,500, 225,000. And then share premium will be prior to bonus issue, my share premium 287,500 minus 37,500. $250,000. Total 475. So what they are asking you, ordinary share capital will be 225,000 and share premium will be 250. Answer is number 2. Okay. Which of the following should appear in a state companies? Anyway, the answer for question number 21 is second option. Question number 22, which of the following should appear in a company's statement of changes in equity? The changes in statement of changes in equity comes part of IAS 1. It's like a separate statement that talks about the equity and equity, in other words, share capital and reserve. So normally ordinary share capital, share premium if you have, retained earnings and also you may have revaluation surplus and total. There may be other columns also. So this is just to show a reconciliation of the equity movements. So the question here, what they are asking you, which of the following should appear in a company's statement of changes in equity? The total comprehensive income for the year, obviously that is part of it. So here, profit for the year, it will come. Profit for the year, it will come, and then that you will get it here, and then also other comprehensive income. So that will also come here. So that actually the profit for the year should come under retained earnings. Other comprehensive income also will appear here, and the total will reach here. Then the second one, amortization of capitalized development cost. This will not come. So answer number 2 cannot be an answer. If answer number 2 cannot be an answer, first option gone, second option gone, and the last option gone. So the answer should be third option, which is 1 and 3. Third one, surplus on revaluation of non-current asset, obviously that also should appear part of statement of changes in equity. So answer is third option, which is 1 and 3. With this I will remain, and I will continue this on a different lecture in another time. Thank you so much for watching my YouTube channel. Once again, thanks a lot.